right. Hmm. Are you able to see my screen by any chance?
No, yeah, I can see it.
Oh, okay, cool. The presentation one, right?
Yeah, the presentation, yeah.
All right, cool. We'll switch it over to like something else. Just want to make sure, just because sometimes it glitches for whatever reason.
Where are you from, man? Where are you working from?
Work from Long Beach.
Long Beach?
Yeah.
Nice. I'm up
Yourself?
here. I'm up here in Fort Collins, Colorado.
Oh, okay. And so are you guys mountain time right now?
Yes, sir. Mountain time.
What is it, like 7 over there?
7:05 p.m.
Oh,
Yep.
5. Nice.
What time is it where you guys at?
6, so 1 hour less from you
Okay.
guys. I used to
Where you
work.
at? What's that?
Sorry, go ahead.
Um, I forgot what I was gonna say. Go ahead.
No, I was gonna ask you. I used to work for a company that used to be in Arizona, and they always used to let me know when time used to be different. So how to learn all the time zones, not only in the States, but also internationally, just because we used to work all over, used to be a worldwide company. Um, and so I got really used to like knowing all the time zones rather quickly.
Oh, no, that's crazy. Is that what you did before this? Like real estate?
Oh, that was a long time ago. That
Oh,
was
long time
probably
ago.
like 5 years ago.
Oh, jeez, yeah.
2024, like 6 years ago already. Yeah,
No, so when was that? That was like what, 2018? 19?
2018. Yeah,
2018, right?
2018. That was,
Damn.
and that's how long I've been here in Long Beach for, since 2018, a little before 2018.
How's long be treating you?
It's cool. I like it. It does its pleasings, and then sometimes it doesn't. So just part of
Yeah.
it, part of how it is over there. How is it over there in Colorado? Like I've never been to Colorado whatsoever.
I mean, like where I'm at right now, like demographic wise, it's mostly like white folks. You
Mm.
get a like that's kind of basically what it is because I'm still going to college. I'm going to Colorado State University.
Nice.
And so I'm doing that. I'm on my like last 2 semesters, so I'll be graduating in the fall of this year. So
Hey,
I'm doing
congrats,
that.
man.
No, yeah, but I decided I want to take a stab at real estate wholesaling and see what happens. But I mean, so far I've got my LLC registered and everything. So
In
I think
Wyoming or in Colorado?
what's that?
You said it in Wyoming or Colorado?
No, in Colorado.
Colorado. Oh, okay. Gotcha.
Yeah. Although I've heard that it's better in Wyoming because you don't get taxed, right?
Uh, well, it's good to have like the holding company in Wyoming.
Uh,
And then on the state that you're doing like the business is, so that it's just for protection, layers of protection,
yeah.
basically. So the way it's supposed to be set up, it's Wyoming is your holding company. That holding company owns your LLC in Colorado. So basically, you're out of the picture, out of everything in case of any lawsuits or just anything that comes against you. You're you're not you're not the owner. The Wyoming LLC is the owner, and then you're supposed to have like a lawyer set up everything for you, so that way if there's like a lawsuit, then they send it over to the lawyer, and he or she is the one who handles that on your side. But
Gotcha.
it's just layers of protection.
Isn't that called a trust or something like that?
You can have like a trust as well too. You can have a revocable trust, irrevocable. For real estate, it can be a land trust as well too. So there's so many different things that you can do in the spectrum of real estate. Is it like your long-term goal to like become an investor or and to have like your own portfolio?
Yeah, but I mean, as of right now, though, I think my main interest is to, get that capital, and I think I can do that through wholesaling first. So,
Yeah, yeah, that's definitely gonna do like the job. But yeah, it's just more, it depends. Once I guess you transition over to like an investor, then that's what I'm doing right now. I'm transitioning over to become have like my own portfolio. So those are
Mhm.
all the steps that I'm getting to like literally know at the moment. So I can take precautions of all that.
Yeah. No, yeah. Yeah, because once you start holding assets, it's kind of really important that you're like protected so nobody goes taking them away from you.
Yeah, especially properties. That's like the number one thing into the real estate too. So make sure I protect the land from there. So it's already 10 minutes in. It's probably gonna go for like an hour and a half. Any questions you do have, just by all means, let me know at the end of it, or if you have any questions, just so you want me to rephrase, retouch, you can interrupt me, raise your hand, and then we'll go from there for it. So the way usually for these meetings go, my name is Elton, like Elton John. I just don't happen to do any singing or any of that. I am still a little bit sick for whatever reason or what I got for the last couple of days and the last couple of Zoom calls as well too. So you'll probably hear me cough, sneeze, and whatnot through the presentation. So I do apologize about that. But we are gonna basically touch over real estate wholesaling. Myself, I do wholesaling here and there. I get right now I am transitioning over to becoming like my own investor, having my own rental portfolios in other states, in aka landlord friendly states, just so I can take leverage of a lot of opportunities out there in those red states, just because we can do as an investor, you can do a lot of things, but when it comes to like getting into it, especially for me, is playing the long-term game. It's just holding a lot of those properties, and in the long-term game, I rather be on those states that are more on my side, so that way I can always protect myself. And then any adjustments that I need to make, I'll make them because again, the state allows me to do so with the tenants, and then it's less of a hassle. Over here in California, a lot of things are changing. There's new laws that just passed about tenants and whatnot. And so
Mm.
it's just getting crazier on those states. But regardless, that's where you have to do your due diligence. Part of due diligence is knowing taking all the steps or knowing like all the steps of where you're going to and the things that you're going to be doing when it comes to real estate wholesaling. Some of these are all the steps of like wholesaling. I'm mainly going to go a lot in terms of the estimate repairs, basically a lot of the analysis side of it, just because that's what the whole series is about. It's analysis paralysis, where a lot of people spend hour, 2 hours just analyzing a deal and seeing if a deal is actually profitable, if it's not profitable, how much would a buyer get it under contract for. So we're gonna learn a little bit about that side. Um, but again, these are going to be like all basically the basic steps of like wholesaling overall. The recording will be available in the comments after the meeting. It should take about an hour or two for it to like upload. I do comment on there, or if not as well too, it will be available. I'll show you over the website as well too, where everything and the previous recordings have will be available so that we can watch those, learn from those days events that happen, questions that people have asked in the past, as well too, that maybe nothing's gonna get asked for today, and so you can learn a little bit about that. But moving on forward with our wholesaling, especially the repairs, that is the number one thing that we are going to go over. But the basic foundation of real estate, it is going to be ARV, or after repair value. As the word says it, after repair, the number one thing we got to understand is repairs. So we are going to go through how repairs get done. But before moving over to that, we also got to understand that when it comes to buyers are going to do things very differently across the board. If you have three buyers lined up over here, investor one, two, and three, you can see they do their things very differently. I've come across way more than these, but these are like if investor one, investor two are like the main ones. Investor three is going to be like the duck that does things way different than everybody. And so, but they do all start with the number one thing, which is going to be after repair value. That's the basic foundation when analyzing a deal. The next step is going to be, again, the repair side. So we are going to go over repair costs. These are going to be the basic foundation of repairs. Some of them, other people like to go based on the square footage. Some buyers already they're already on contract with a local contractor or a national contractor that is licensed, or it cannot be licensed as well too, where these numbers are not, they are broad spectrum wise, but they are pretty much right on the spot when it comes to analyzing a deal or looking at a property, how much repairs it needs, because the again a investor can spend either go like the most inexpensive route, or they can spend hundreds of dollars, thousands of dollars, even more than what your estimates will be, just because they want to get the luxury repairs as well too. So I don't really niche down to like repairs and dive more into it, but I got like what the basics are, and these are going to be like the basic repair costs when we're analyzing a deal, from the light repairs being just carpet and paint. That's usually going to be like a rental that you're going to be looking into. That it's again, if you have a buyer that is just buying a lot of rentals, it's only carpet, paint, maybe change a few things up, like cabinets or something that got messed up along the way. Average repairs, now we're getting to like fix and flippers. These guys are going to be doing a little bit more than just the rental side. They're going to take a few extra measurements to make sure that they bring the most out of the value out of the property, and then afterwards get it inspected, see what it can appraise for, and then try to sell it for that appraisal more. Or if it happens to not sell, take some time to sell. Then from there, it's going to sell a little bit less. But with the way things are going to be going right now with the market, things are going to get a little bit more expensive. So it's all about starting now. And of course, a gut job repair is going to be more of a stripped down home, where if you look at it, it's just straight, just wood and then a roof right above it. There's no walls. There's no floors. There are floors to like step on, some hardwood, but overall, there's nothing like no luxury vinyl plank on the floor whatsoever. It's just strictly just panels and wood all over the place, and then you're gonna take those repairs as well too. Moving on forward, whenever we're doing a analysis on the deal too, we do have to stick to certain parameters when we're analyzing a deal. We don't want to go beyond these, because again, part of the process is of the after repair value is knowing what the value is of a property. And when we're looking at a value, we want to find comparables or comps, as some people like to go with, that are similar to the property that we're looking into. So these are the what an appraiser, when they come over, they look at a property and they want to analyze what the value will be. They'll look at what other properties are similar to, but they are going to stick to certain parameters when checking out those properties, which are going to be these. Is going to be plus or minus 300 in the square footage of the living space. Other properties in other states, they have a basement as well too. That's not really included on the plus or minus 300. It's not even included overall into it. It's just more about the living space area. Sometimes when you're looking at properties that are more suburban, that are more farm style as well too, we are going to get more involved with the lot square footage. That's when you have to bring the plus or minus 2,500 in the square footage for the lots. One major thing is when looking at comparables, which I'll show you even as well too. When we're looking at some comps, it's sticking within a 1 mile to half-mile radius. The reason why is because an appraiser, as the picture shows over here, there are certain things that an appraiser won't cross. There are certain roads that an appraiser won't cross. This is an example over here in Long Beach. Definitely a very busy road. There's buses, trucks, a lot of high traffic every single day in Ocean Boulevard. And an appraiser's not going to go from the compare a home on the left side compared to like a home in the other side of that busy road, just because you got to put yourself into perspective as a family. A family is not going to go from one side to the other side to just check out a property and then see like, hey, my property is worth as much as that other one over there, just because it's very close. No, appraisers don't really analyze like that. They stick within like the same neighborhood. And so they won't ever cross a double yellow line, a high traffic zone road whatsoever, just to compare a home in the other side that it's within the same year, within the same square footage. It's the same style. It's also the number of levels it has. Everything's like basically similar, but they just not gonna cross that whatsoever. Um, And another thing which I just mentioned is the years. Want to make sure we stick within the same years of that comp. You don't want to compare a 1950s home to a 2005 home just because the structure is different, the materials could be very different, and of course, just the timing is very different. So we want to stick within the same years. And additionally, when we're looking for comps, we want to look between 3 to 5 comparables. Nothing less than that whatsoever. Just because you don't want to be just finding one comparable and then your end buyers could have questioning like, okay, well, what kind of documents or what kind of proof do you have where this is the right ARV? Because you are going to come across those buyers where they're going to really push you and tell you like, look, I want to make sure that you're doing like the right due diligence. Otherwise, they're going to bring you a low ball offer as well too, and you're not going to get a lot out of your wholesale fee. So you want to bring all that proof and all the homework that you did and analysis to them to make sure that you're getting the most out of your buck, and then um, basically just make sure that you get your wholesale fee out of it. Um, and then the other thing too, which we'll talk in a little bit, is contingencies. Whenever you're bringing an offer into a seller, if it's off market or if you're working with an agent directly on market, these are some contingencies that I've used and that you should be using as well too when looking at a deal, because these are you want to make it as simple as possible in terms of terms, but also make sure that let the seller or agent know that these are mandatory. You stuck to these contingencies for a very long time. They have worked with you. That everything has gone very smoothly, and that way they show like your seriousness. They show that you are being persistent and that are actually sticking to these contingencies, just because again it is safer for you to have a bigger time frame. Like closing, you can close quickly, which a lot of agents and a lot of sometimes sellers do get scared about that. So with sellers directly that are off market, you can always work with them, like, give them a little bit extra more time, but the faster it is, the better it is for them as well too. Also, as a contingency, I like to leave this one a little bit back, is paying the closing fees. At first I mentioned that I don't even mention that we're paying the closing fees as a contingency as we're negotiating if they happen to be interested on our offers. And that's when I like to bring, look, I'm willing to actually pay your closing fee so that way you can get a little bit extra more on your money. But at the same time, can you work with us on the asking price on our offer that we're looking to get out of a deal from there? The next one is going to be 1% EMD. It's earnest money. This is pretty standard to do 1% or sometimes $500. It just shows like your interest on the property. Sometimes you can go 2% or 3% as well too. The higher you go, it just shows that your seriousness. But at the same time, again, you want to leverage those seriousness and then just play it, leaving them as your backups or like up your sleeve strategies, so that way you can bring them in and then show that to like the seller or sometimes like an agent as well too. But all across the board, it's pretty standard to like 1%. Inspection period. This is the number one I should put at the top, but it's just this should be like the number one thing, is having an inspection period, and let the seller or agent know that your inspection period is 15 business days. That is strictly Monday through Friday, 9 a.m. through 5 p.m., because those are the days that your contractor works. And that's when they're available as well too. So that's what the times like they're going to be using out of their day, out of their other projects to come do like their inspections and to check out the property for you. So we like to do 15 days as well too, because it gives you more time. Sometimes again, part of the process is negotiate. All right, can we do 12 days or 13 days? Whatever suits you, you slowly start coming down from there. So as you can hear, like my strategies, it just plays around. I'm basically trying to listen from the seller or the agent, what's their story, what's going on, understand what's happening, how is it that I can help. And if they happen to be interested on my offer, I play with these contingencies depending on how serious they are and where it is that they are in terms of like their motivation and the time frame of closing with everything. And of course, the biggest one, the overall biggest contingency, it is a cash offer to pay for the property as is on its current condition without any updates. So that should be as well too considered into that. So now moving forward, I'm gonna be sharing my screen for the analysis side, which is this is going to be the numbers. So we are going to be using I've designed this calculator just because I learned a lot on my process of wholesaling is on the calculator side, or head over to my website eltonvargas.com. You can get the ARV calculator. It is completely for free. Just use coupon code not gatekeeping, and I'll put it in the chat as well too. And then from there, you'll have access to the ARV calculator, and there's also another calculator as well too, like a rental one, if you're like getting to invest like into your own. But basically, we're gonna go through all these steps because the calculator does everything that we just mentioned. Besides the contingencies, that's just something that has to be written in the contract. But the main thing of what this whole series is about, it's about analysis. So this takes all the guessing away. It expedites your time of figuring out what your offer should be in to bring it over, and also helps you understand where your end buyer is going to tell you, I want to buy it at this much, or I want to make this percent of profit and whatnot. And it shows you like what their profits will be. So that way you can bring that over to their table as well too, and bring in their comps and everything, that all the homework that you've done with them. So we are going to use a random example. I do have like a spin the wheel thing over here. So that way it's not a specific city that we like to look. We want to make sure that it is all over the US that we're looking into the States. I do stick away from like Hawaii and also Alaska, just because that's a little bit more challenging. But we are going to be sticking to today in Santa Fe, New Mexico, and run some of these numbers. The numbers that I'm going to be doing are going to be on market properties. To do an off market property, and because the very first thing it asks you is an asking price. The way you find out with Zillow or even Redfin as well too, is, let me look Santa Fe. Let me start looking into some properties real quick. New Mexico. I want to see what the county is really quick for Santa Fe, New Mexico. So that way I can pull this up. But what Zillow and Redfin have, whenever you're looking at a property, let me just get this address of this one. They're gonna have what's called like their Zillow estimate. It's called Zillow. Or Redfin's gonna have like the Redfin estimate. Another free resource I like to use is PropWire. This is literally completely for free. Whenever you want to look at a deal, this also gives you like an estimate as well too. But part of the process of wholesaling is reaching out to like the seller, and letting them know what that you're interested on their property. Why isn't this not popping up? Here we go. And then over here it gives you an estimated value. So that's what all of them are going to give you. Same thing with Zillow. This has to pop up as well too. All right, long view. This one says none whatsoever. But part of it, another thing, a strategy that I like to use is always ask him when I'm calling like a seller directly, is ask him because they pay taxes. A homeowner pays taxes every single year. And I always ask him, well, if do you pay taxes on your property? They tell me yes, 100%. Oh, that's number one answer all the time.
Right.
And then out of that, yes, it's like, all right, well, what's your property's value based on the taxes? It is an assessed value, so it is different than the actual value of the property, but it basically gives me understanding how much do they think their property is worth based on their taxes.
Right.
Because again, that's the number one thing they're gonna be paying every single year on the property is their taxes. But sometimes they do like an appraisal of the property if they want to, or again, the county is going to do it for them. So the county is going to give them a lower offer or lower value on the property. But again, that's to help them on their taxes. But they're gonna a lot of the time they're gonna rely on that. Or sometimes if they're doing their due diligence or have like a friend that is a real estate agent, is they're gonna help them out as well too. But basically, what I'm trying to get from the seller when I'm looking at an off-market property is have them pitch to me what is the number that they think the property is worth. So that way, when I'm doing my numbers, that's the number I'm gonna put over here. And then go start doing my due diligence based on what it is that that number that they gave me, and just go from there whatsoever. So for I need to look for the county over here. I don't like to look at city. I just like to go based on the county. So Santa Fe County. Something it's basic like that. And New Mexico. So let's check. The reason I want to do the county is because again, it's gonna give you a bigger spectrum of the area. I'm gonna know where the metro area is, which is gonna be right over here in Santa Fe. It looks like we have some suburban areas over here, but we're also getting close to Albuquerque, New Mexico. So that's possibly another area as well too. And then sometimes what I've noticed on these other states, um, as well too. It's not like California. Over here in California, everything is really close, especially here in Southern California, and especially with traffic and the population. It does take, to me, this would be like like an hour of a drive here in California, maybe 2 hours of a drive with the high traffic. But over here in Albuquerque, New Mexico, and Santa Fe, New Mexico, this is probably going to be a 20 to like 30-minute drive just because there's less population, it's less dense over there, and it's just going to be a smoother a road on their area over there. Sometimes I can get that information from an agent, but for right now, we are going to be looking for properties. When I'm looking at properties, I do have specific filters. So again, because I have my buyers know what they want, and I already know what they want, and these are the filters that they have. Again, your buyers could be very different from what I do, but I'm doing an example of what I learned from my guys. And basically, when I look for these properties and find these properties and then analyzing these properties, these are going to be the parameters that I like to do, just because these are going to be a higher potential deals, just because either the seller is already getting tired of getting offers from the agent, but they're not really satisfying offers, so they're willing to negotiate. The property has been on the contract multiple times, but it's just not getting closed for whatever reason. So there's going to be a lot of factors into it. So my first thing is I'm looking for some houses for fix and flippers for today. I'm going to be looking for properties that have been for more than 45 days or 45 days stale. Minimum of square footage is 1,000, and then maximum year built. I am going to be looking at nothing more than 2005, a 20-year time period, just a year from now, just because. And I definitely want to exclude 55 plus communities on my filters. So far I have 166 homes. To me, this I'm not looking for these homes. My strategy when I used to do wholesaling was reach out to agents. So this basically because agents are the ones doing all the work. They're doing all the calling, door knocking, marketing. They're already doing all the work. I'm not gonna take those extra measures. I'd rather work with them and let them know, hey, I work with the group, or I'm an investor myself, and I'm actually interested on a property you have listed. If this deal doesn't work for whatever reason, do you have anything else? So I'm trying to work the relationship with the agent just because, again, I know they're doing a lot of the work for me, and I'm just coming in with the money to help them move their inventory so that way they can move on to the next property. And then, hey, if we like that next property too, let us know when you have it, like before you actually list it. Let me know before you have it. I'll check it out and I'll do my numbers. And if we do like it, we have you represent our cash offer so that we can get double the commission. And then from there, present that offer to your seller. And if again we can't work through that, then we'll move on to the next deal. So that's the relationship I like to play with agents. And so I see this not as 166 homes, but 166 agents that are doing a good amount of marketing and are just being consistent. And I also get a sense on them how consistent they are as well to getting properties on market, off market, and whatnot from there. So for today, I'm going to be looking for a property to analyze with you guys. I am going to be looking for like the lowest price property, so that way I can see where's it at, what's going on with the property. I like to look at the pictures. I rather look at them quickly. Sometimes I get to understand if there's like if this is how the properties look automatically off the bat. This is not even a home that is going to be for sale. It looks like it's probably like a room because it's a giant mansion going on over here. Uh, this one off the bat looks really good, but we are heading over here to like Albuquerque, more in the south area. That's rather inexpensive. I don't see a lot of homes for sale in that area, so that's kind of a little bit of a red flag for me, but I can still check out like the neighborhood and just get to like understand that. Same thing, the next one. So I'm looking at for pictures of like properties that do need like a little bit of work or are outdated. Based on this property, the third one down, I did notice that there's been already some updates. So if I'm seeing this one that's a little bit more expensive, but then doesn't have those updates, this could be a potential deal. But I do see that it's a little bit more north as well too. Um, so again, when I'm looking at those properties, I just want to get an understanding of the neighborhood, see what's going on over here. So far, even with that one as well too, I don't even like it. So again, I just gotta continue moving until I see something more like in the area. This so far. So this is a good one off the bat, a little bit outdated, some brown. Looks like we can update like the ceiling as well too. Um, we have some snow over there as well too. I like to do street viewer, so as well I can understand what the neighborhood is like. Again, trying to pay attention to those roads because again, the roads are going to be like the main thing. So that way I can understand where the appraiser is going to head over to when they're going to look. They're going to check out like the appraisers. And then so far as we can see, right over here we have Cerrillos Road. That looks like a busy highway, and if I were to drop this right on here, we are going to be seeing a busy highway. So again, an appraiser, again, like I was mentioning earlier, they're not going to compare this home to a home that it's and the others, it's right behind McDonald's over here in this area whatsoever. They're just not going to do that whatsoever. They're going to stick within the same neighborhood, but I also do have this smaller one. Let's see here. Think it's just part of like the neighborhood or like part of the plaza. So still kind of a high traffic area. But that's because they have like a mall or like a plaza over here, which is really good because again, it's going to be very convenient for whoever's going to be living in this home. So far I like the neighborhood. So this so far is a good deal for me to check out. So now let's go with the numbers. Asking price for this one. Let's go back real quick. Um, Asking price is 419, 3 bedroom, 2 bath, 1882. 419. Sometimes I put in the debt over here because sometimes some properties do have debt. Again, that's something I want to use because I'm not sure for those who know what subject to the mortgage is. Subject to is definitely very beneficial because again, if the seller owes a lot, then we can do a subject to, and that means more money for our end buyer to spend on it. And then so far. Looks like there is a good amount of balance left. 286, 168. On the balance, sometimes to confirm that balance is asking the agent because this one is listed with an agent directly, is asking the agent how if they happen to have a lien on the property or any debt on the property. Liens are basically let's say they did like some work on the roof and they didn't pay the roof guys whatsoever, then the roof guys put a lien on the property. So when the property sells, they'll pay back that part of the equity back to them, to the roof guys, so that way they can make their money. And then the debt is going to be like the mortgage, or if they refinance as well too, that's going to be part of the mortgage as well too. So far out of the 419 that is asking, they do have what was it? I thought I copied it. 286, 168. 168 in terms of debt. Um, and again, we are trying to do a wholesale deal over here. And then based on the wholesale deal, I do have this parameter set up to pop up when it's properly, is this could be a subject to property. Um, this is still skeptical just because our offer is coming in rather low. So we still need to go through like the rest of the stuff. But this is giving me like a signal that this could be a subject to property where we can take over the debt that the owner has and just pay them a cut of $5,000 to like $10,000, and we pay the agent the commissions to take over the property. But we're buying the property close. We're buying the property at the estimated balance, and again, just paying like whatever it is that we need to get the seller to let us take over the mortgage, just because they have a good interest rate of 3.87 comparable to the rates that are happening right now. I'm not gonna get too much in details in terms of subject to, but that's something that I like to pay attention to as well. The next thing is going to be the square footage. 1882 is the square footage. There is no basements in New Mexico because there's no tornadoes over there whatsoever. So we don't have to worry about that. Closing costs, again, part of the contingency, as I mentioned earlier, we can play the closing costs. The standard is between 2 to 5%. I like to play it safe, go with 5%. But again, I can bring that contingency over to the agent or the seller and let them know that we're willing to pay. So at least I know it gives you a perspective of how much the closing costs will be. Now, based on earlier, when we're going through repairs, to me, I already know the kind of repairs that it needs for this property. I'll definitely go save flooring, painting. Again, get rid of that popcorn ceiling. Definitely update the kitchen a little bit. It has a beautiful setup for that island. Definitely remove this wall, bring in more space as well too. Um, so definitely can open this up a little bit more for the home. Remove that carpet, make it all floor from there. So to me, it's I'm already looking at kitchen, walls, floors, bathrooms. So this now we're heading over to like that average section of the repairs, as I was mentioning earlier, which is right over here again, as we can see, floors, kitchen, bathroom, paint, lights. So we're getting towards that path. So I'm looking at basically around average repairs over here. Again, I'm not gonna spend too much time with it, but the average repairs is between 25 to like $40 for this property. It is a big home. So I'm gonna play it safe and just go with 32 dollars. Again, just playing it safe for right now. Again, because my end buyer, they can spend way more. They can spend $40, so like $40 a square foot. So that's gonna be between 75 to like maybe $80,000. So it all really depends on what they want to do. Or sometimes some of them are just gonna take the cheap route, just change the carpet, paint everything up, and just do little touches on the kitchen and bathroom, and that's it. So it all really depends who your buyer is whatsoever. So again, I don't spend too much time. I just look where my range is gonna be, and I just try to play it safe. I was gonna go with $25 a square foot, but I'm gonna give myself extra room just in case of whatever was going on from there. So far, we have $60,000 for repairs. So far, additionally too, we do have a possible offer to bring in to the agent, because again, this one is an agent listed property. But next thing I need to know is the ARV. I need to put the profit for my investor. If it's going to be a buy and hold, they're going to do 10%. If they're going to do a fix and flip, they're going to stick between 15 and 20%. Then you're going to come across greedy buyers where they're going to want to make sure they get a lot more from there, which most of the time they do just because of the repairs. But the average standard for a fix and flip is going to be a 20% from there. And then buy and hold again 10% just because they're gonna hold it for a very long time. So over here, it does give you two asking prices. And you might be asking, why does it give you two? Well, the reason is because the first one is from the agent. This is a property that is listed with an agent. So the agent is telling us that the property is worth $419,000. They want us to, we need to do about $60,000 in repairs. And then if you want to make our profit, because again, this is a business that you're thinking about, then we want to make our 20% if we're putting ourselves as the buyer, but then we're assigning the contract to somebody else, then we our end buyer or ourselves, we need to buy it and sell it. I mean, we need to sell this property in the future for a fix and flip deal around $625,000. That's what the agent is telling me. So that's when I'm reaching out to the agent, I will ask him what the story is, what's going on with this property, what the motivation is, and then if he or she happens to have any comps that are close to this asking price. If he or she does, then by all means, this property can sell for that much. But if the agent does not, then that's where our second ARV is. And this ARV basically reflects on what we need to get it under contract for. So if we were to get it under contract at 272, make our $60,000 in repairs, make our 20% profit, then the property needs to sell around $432,000 basically. So now I have a range of ARVs. So when I'm looking, the next thing I'm gonna do is look for comps. When I'm looking for comps, I'm gonna look for comps close to those asking prices. Because again, that's what the agent and the market is basically telling me that is going to happen. Where's my subject property? Where did it go? Wolf. I thought I had it over here. Oh, right here. All right, so now I'm gonna look. Next thing is looking for comps. So when I'm looking for comps, I am looking for properties that did sell in the last 6 to 9 months. Um, Let me remove some of these filters. Go back again to sale. So I'm looking for properties that sold in the last 6 to 9 months, based on what the comp of mine is, which is 1882. Again, we're looking for um, plus or minus. What is it at? Oh, I minimized it. We're looking for plus or minus 300 square feet, half mile to a 1 mile radius, does not cross double yellow lines, and plus or minus on 10 years of a difference. And then so far, I need to adjust this. So we're looking for a single family home, plus or minus 300, so 1500 to 2250. And so far, there's nothing whatsoever. And that's through Redfin. That's why I like to use different resources so I can make sure I'm able to find those comps. So next one I'm gonna use because I already pulled it up over here. I'm gonna use PropWire. PropWire gives me those comps. And again, this is why I like PropWire, because it gives me that half mile to a 1 mile radius, and it shows on the map as well too. So I'm gonna go with this one with a 0.75 mile radius. And as you can see, there's not a lot of comps on this side, which is a great sign for me because I'm not trying to cross over that side. I am sticking to single family. Uh, I'm gonna go 1800. Yeah, so it's gonna be 15%. So I'm gonna go plus or minus 10%. Same number of beds because again, I'm looking for a property that is 3-2 for similar as us, and then also the year's 1965. Um, Again within 10 years as well too. So these are going to be my comps over here so far that the PropWire is giving me, and I'm seeing that this one's a little bit. Just want to make sure I'm able to get to it. Yeah, this one it does let me get to it. Looks like this property sold in November. Um, I like to use it, make sure, see what kind of property it was. So I'm gonna use Zillow so I can check out what the condition of the property was. Was it a fix and flip? Was it just somebody selling like their home? And it did sell in November. Let's see, how much did it sell for? Sold for 450, and is that what it said over here? 450. Sold for 397. So that's the thing is sometimes that's why you want to look at different resources because all of them are going to give you different information. All the time. So that was like the asking price, but they didn't really disclose. And that's the thing. Some states, there's non-disclosure states. So some states don't really disclose what the property actually sold for. So you have to go through like the records, go through like the county. You can go through like the county clerk's office, like online website, so that we can check that out. You can use PropWire, sometimes PropStream. That's like a paid subscription. It will show you in there as well too. But I'm trying to see right now what kind of property this was, if it was a fix and flip or it was just a homeowner that lived in the property from here. And so far it looks like somebody lived over here, not a lot of updates. So, but I am going to be using this as a comp. And the way I'm going to be using this as a comp is going to be based on the price per square foot, which if it's sold at 397 and it's a 2005 home, let's see, where does it at? Because this doesn't give me there's no, doesn't give me the actual asking price. What was it 397? divided by 2005. So that's around 198 per square foot. So I'm gonna type in 198 per square foot over here. That's my first comp. Again, I gotta look for 3 to 5. So that's one of them. Next one, it was showing me. And then sometimes this is what I like about PropWire too. It does give you like those calculations based on the price per square foot. Next one is going to be 354 for this one. This one sold in January. Oh, I forgot to change that. Change it within 6 months. So I thought the other one sold in, huh? Oh, this is the one. Sorry. Um, so it looks like so far within the last 6 months, there's only one comp, which is only the property, the one that we just looking at just now. There's nothing else within this radius that doesn't cross over there, and I'm not trying to head more south over here whatsoever because nothing's even popping up over there. So as good as it may sound, just one deal is not really gonna cut it because again, we need to have 3 to 5 comps from it, and then based on our property subject that we're looking into, again, part of the rule is to stick to those 3 to 5 comps. And again, there's nothing from Zillow, there's nothing from Redfin, there's only one from PropWire. So I'm not gonna force. This is a case scenario where I'm not gonna force myself to try to make a deal work. But I am going to force myself into reaching out to the agent and just bringing a crazy offer, which we saw over here earlier, at 272, 300 or even lower, just so I can work on the relationship with the agent and see what else he or she has. So that way I can see if it's worth like a deal. Because so far for this property, as good it may need to like on the updates, there's just nothing else going on within the specific neighborhood where again, I'm not gonna force myself into pushing like this is gonna be a deal for sure. And the reason I like this deal is because it's been sitting for 141 days. Um, there's been probably a good amount of price reductions since the time that it's been listed, and it's only been about $40,000 in price reductions. Maybe right now in mid-January, they're probably gonna do like another price reduction. And this could be like a really bust for an agent. So what I would like to do with this one sometimes, or when I come across deals like these, where it's just constantly getting price reduction and also looks like it was under contract as well too. Looks like it was under contract 2 times. As you can see over here, it says relisted. It got under contract. So that's I have a green flag, how long it's been sitting, and there's been price reductions. But then there's also a red flag that somebody got under contract, but for some reason they're not able to close. And that could be a lot of different factors, but sometimes like one of those factors, it is about the property, either the property or the seller. So either the seller's not budging on the price, or there's something that it needs more than $60,000 in repairs from the property, that it's just a lot of buyers are actually backing out because they're not liking all extra work that it needs from there whatsoever. Um, so what I like to do with these is actually wait for it to actually be out of the contract from the agent, and then see if I can work with the seller directly. So that way there's no commissions to be paid with the seller. Because again, the contracts with agents, they do expire after 6 months. It depends on what they have it on their contract for. Sometimes 8 months, 10 months, or a whole year. It really depends on what they're able to promise to them. But from here, it's not a really good mix of a property that I can look into, just because again, there's not enough comps. It's been sitting for too long, which is good, but then the biggest bad is it's been under contract in the past whatsoever. So again, this is something that I hate to do, but I like to do sometimes just because I'm gonna reserve the property as a backup so I can come back to it in the future. But I gotta move on to something else that I can bring over to a buyer that might be interested on it. So that's what we have to move on forward. And then the next property, I like it, but it's a little bit further up. It does need a little bit more work than the property that we're just looking, but it's listed around the same price that we were just talking of the 419. So again, I'm just looking for properties that just need a good amount of work. So this is part of the analysis part. Just going through like a lot of things, but let's say for laugh and giggles, we do end up finding other comps within the same price per square foot. Actually, I'm gonna go. I think one of them was like 223, and there was another one for like 237 on the price per square foot. So let's say we're actually able to find three comps that are really nice for this subject property. You're gonna put the price per square foot again all the time when you're looking at a properties. It is gonna tell you right over here what the price per square foot is. That 419 I was just looking at, our first deal. I was just looking like in the neighborhood, what are other ones that are selling for. So I had seen this one, I think it was like 272. And then you have this 410 one as well too for also 272. So actually, let me adjust one of them. 272. So once you have like your three comps, it's going to give you like what your ARV is going to be from there. And then from here, I'm gonna round it up, 435. Is going to be basically my ARV, and then my investor, the one who I want to bring the deal over to. It's either going to be a fix and flipper, or if I know somebody who likes to buy and hold over here in this area, then I'll reach to like somebody who wants to buy a hold. But for right now, we're going to do fix and flips. And basically now it's going to show us the path of the investors, how much the investors will get the property under contract, or they will want to get the property under contract just because of their or their numbers and how they like to calculate the numbers. Because again, if you look up earlier, how investors buy, again, investors are going to do things very different across the board. So all of them are going to do their numbers rather differently. But once you get to know, either they want specific return on their money, it shows you over here what the profit it is going to be. If they want a 20%, or maybe they don't get too greedy, so they actually like to a little bit less from there. Um, but this is going to be my perspective on where my buyers are going to be purchasing my contract, or what the property that I'm looking for, how much they will want to purchase it for. And then based on the offers that are coming over here, it doesn't really match where my possible offer needs to be. So it looks like my offer needs to be way lower than that, and that's gonna bring a way lowball offer, just because again, if we're to quote unquote find good comps, but this is going to be our AFV that we're able to find, that we have to bring over to our end buyer, and this gives us a perspective of how much they will end up buying our subject property for like this asking price. Now, if you're looking for a buy and hold, it's going to do the numbers for you automatically. So if we're looking at this property, if we need to get it under contract for 272, and it looks like this property is good for someone who's going to be buying and holding, just because they're going to spend a little bit more for the long-term game and just play that long-term game whatsoever. So they're interested in purchasing that. They'll do the updates themselves. They'll probably do minimal updates from there. And again, they like to do a 10% at least minimum profit, so that way they can refinance and then use that money, or they refinance to buy another property. And if you have another property in the same area, that works even better for you, because they'll reuse that money to buy your property and then just continue getting their deals whatsoever. So this is the entire steps over here of the calculator whenever you're looking at it. So that way, we did spend a good amount of time on it because I'm explaining every single process. But once you start putting in the details, you go from putting the details about the property, looking at what the repairs will be, because you already get a sense of what the repairs need to be, how much your profit is going to be for your investor. You need to find comps close to whatever this is. And as you can see, based on the comps or the properties that are similar to what I was looking for in the neighborhood, we find out that the ARV was actually closer to our asking price. So that's where the lowball offer is going to be coming into like those places. And it sucks that a lot of these lowball offers get rejected, but that's the reality, because again, the agent in the beginning is telling us that this can sell for $625,000, but there is no proof whatsoever, unless again, real estate agents, they do have access to the MLS, so they're going to have different resources. But there's free resources that we can use, like Zillow, Redfin, PropWire, or if you want to pay for a subscription-based one like Batch Leads, PropStream and so many other ones, then by all means, so that way you can find different comps. But all different platforms are going to give you different information just because the MLS, they're not going to have a detailed information from the MLS comparable to what the agents have. But sometimes agents, they get over their heads and they think that the property can sell for a lot more, but in reality, it's not really the case every single time. And then sometimes some of them just don't have all the proof. They just tell you, well, this is what the property can sell for, this is what the neighborhood is selling. And that's when you got to bring in your backup as well and let them know, well, so far I only found one property that sold at this price, on this price per square foot, and just go from there if you're reaching out to like agents. But if you're working with the seller directly, it's not about letting them know like react the same way as with agents, because again, agents are a service based, sellers are just more either emotionally or financially in distress. So you got to find that motivation and see what it is that they need at the end of the day, and try to bring those incentives and let them know how you're the best option to work with them, just because of the how quickly you're able to move with the deal, how easy it will be to work with you. All you're paying all the closing costs if you want to bring that incentive in right away, and you start working that relationship with the seller, so that way you can bring that over to them whatsoever. And if you do need help with like contracts and all that, that's going to be available on the real estate educational side. So on the education side, there's the previous Zooms. So that way you can go back to like different case scenarios for like all of them. A cold calling roadmap, video or script or PDF, which is going to be right over here. This is the one that I use for that I designed and I used when I was reaching out to sellers directly. It goes over the steps about knowing how to negotiate from like the deal and understand what's going on with the property before you bring an offer in, handle some objections, different case scenarios. So every and all the questions are going to be on there when you head over to the cold calling roadmap, or you can access the PDF version over here. And where the file section is at as well too, there's the purchase and sale agreement that allows you to buy the property. If you need to terminate the contract, the assignment, which is gonna you're gonna be transferring over the assignment, buying your end buyers could be buying the property, so they're the ones gonna do that. Some free resources again that are gonna be PropWire, True People Search for skip tracing, Sumper if you're looking at a rental property for a rental buyer. This other website called Cocoon to analyze more in depth about repairs on the property. But again, I don't like to get too much, but some people like to do. Meetup.com, this is how you met me, just networking over here whatsoever as well too. So everything is on the website. And again, to access the calculators, just head over to the calculators tab, and then scroll down to the Pro bundle, and then use the coupon code not gatekeeping. So that way you can have access to the rental and the ARV calculator, so that we can start doing your analysis a lot faster and then get your offers sent out there whatsoever. And then the way you get access to them is the ARV and the rental calculator. And there's a new thing that we're working on as well too, which is the quizzes. Spelled wrong over here too as well. This is there are certain different levels of quizzes that we're working at the moment. The available ones that are right now are the easy ones. So there's quiz 1 and 2 on the easy level, which goes over basic questions about real estate wholesaling. If you want to test yourself a little bit understanding about real estate and real estate wholesaling, take the 2 quizzes, see look how it is that you do on those quizzes, and then stay updated for like the medium and hard levels. So there's true and false, multiple choice, true scenarios as well too. So everything is in the quizzes. This is literally completely for free on the more section, which is also categorized as education as well too. But I'm open for any questions that you might have, or for me to go back to whatsoever. So any questions that you have?
So that 200 and something dollar price, that's the offer that you're gonna give. Sorry, like the realtor, right? That's like the last final offer, or that's how like as low as you're gonna go, right?
Yeah, so based on the numbers that we were looking at on the on the our subject property, the
Mhm.
and the 60, let me just go put it back real quick. What was it, $32 that I estimated? So yeah, so this offer from the what was it, 198, 270, and there's, let's go with like that. The offer that pops up over here, it was like 430, 432 or 435. That offer that brings over here, that's basically going to be what our end buyer is going to want our buy our contract. So if they're going to be buying it for that much, then our offer, it needs to be way a little bit lower than that, just because you want to bring your 10, 15, $20,000 wholesale fee to them, because again, this is how much they're going to be buying it. Of course, they're going to negotiate with you as on the price as well too, because you want to, maybe you're not able to get it that low from it, but you have to bring it like a little bit more higher than what they will possibly buy it. But again, that's part of the process of negotiating, is you also got to negotiate with your end buyer, unless you have a strictly a buyer that we all wish we had. It's an institutional buyer that they don't care what they buy it at, and they're willing to take it off your hands right away. But that's not the case for everybody. So I like to play the realistic case, which my realistic case was I didn't have that buyer, so I actually have to find the numbers and then make sure that I stick with these, because when we get the properties on their contract, then our end buyers also negotiate it, and they let us know hard in the face, like, oh, I can't even buy it at that asking price, and we need to be over here. So they weren't one of our buyers whatsoever, and that's perfectly fine. Not every buyer is going to be the buyer that we need, because again, they all going to be doing their numbers very differently. So with these offers, what the asking price is, this it gives you an insight of where your buyer is going to be, which these two are the most common ones. There's a conservative investor, which the conservative investor aligns with buyer number one or investor number one. This is how they do it. They subtract the repairs first, multiply their investing rule, then you subtract your wholesale fee. And the aggressive investor is going to be the opposite. They're going to multiply their investing rule 70%, subtract the repairs, and then you have to subtract your wholesale fee from that whatsoever as well too. So these two are the most common ones. This investor number three is just one extra one that I had that he did things very weird. So again, that's just an example of having three different types of buyers at the end of the day.
Interesting. Okay. What did you say the coupon code was? Not gatekeep.
Not gatekeeping. Oh, I didn't send it in the chat. There you go. Not gatekeeping.
All uppercase?
All lowercase, uppercase. Yeah, it doesn't matter.
Okay.
Yeah, so use that, because again, this that's what you're gonna have. You're gonna have access to the pages. So if you're not subscribing to it, it's gonna let you know that you're not subscribed to it. But again, this free of charge, and then you have access to the ARV or the rental side as well from there. So again, the properties that we're looking at were on market. If you were to look at a property that is on off market from a seller that you have, again, use these resources that it says estimated value from PropWire, Zillow. Trying to find one and see if it pops up. Let's see. So here we go. For Zillow is their estimate. So that's what you want to use. And then you want to kind of average it out from, or average them all three of them out, and then see what the average price is. Or again, sometimes if you're when you're reaching out to like the seller and you get in touch with the seller directly, just straight up ask him like, hey, about how much do you think your property is worth? Because as a homeowner, you pay taxes, right? All right, cool. Well, based on the taxes, how much do you think your property is worth based on those taxes? Because the way it works, if you were to buy your property, you got to get taxed at the new price that you got to buy it at, but you want to be as close as to what it is that they got it under, just because you want to make sure that you're not paying way more, double the taxes than what they were, just because again, that's going to cut off of either some of your profit, if it's going to be a fix and flip, or if it's also going to be cutting off, or if you're holding long term, that's also going to be part as well too. Or if you're making it a rental, it's going to be an additional bigger expense that you're going to be paying as well too. So Zillow, Redfin, they have their estimates, and also PropWire. So if you're looking at off market, just go based on the estimated value. So that way you can play with the numbers. But don't play too much with the numbers just to be like, oh, maybe I can get it under this. Go strictly with if you're talking with somebody, just try to get the number on the other side and let them know like, well, how much do you think your property is worth, and go based on those numbers. And then again, do your due diligence. If you're not able to see like the property, so that's why you have to get in touch with the seller. And the number one thing is ask about the condition, because again, part of the ARV is after repair, but you have to do some repairs first. So what's the Mr. Seller or Miss Seller, can you explain to me, can you give me a little bit more details of what the property's condition is?
Right.
How old the roof is, the foundation, AC, heater, floors, kitchen. Have you done any updates, any domestic, any cosmetic updates in the last 5 years by any chance? Or when was the last time you did any changes? Because
Right.
again, sellers are either going to be emotionally attached to the property because they've been living there for too long, or they're going to be financially attached where they spent a good amount of money into the property that they want to make sure that they get the most out of their deal from there as well too.
Okay, nice. Nice. Yeah, that makes sense. I'm just kind of curious though, what's like the most you've made out of your out of a single wholesale deal?
A single is my markets have been Midwest, so Kansas, Missouri. So a lot of those, it's a lot of buyers are out there. And the reason I picked those is because there's been a lot of movement from the pandemic. A lot of the big companies have been moving out of California. So I've just been tracking where they're heading. Some of them are heading to the Midwest, some of them over to Texas. So I'm just following their movement, and a lot of buyers are actually heading into there. Where some of my meetup events that I've attended here in California, I've come across buyers that are looking into those states. So a lot of those states are not going to be too big, so they're going to be between 10 to like $15,000. The most one that we got out of that, one of them was a $32,000 one, but it almost didn't work because of foundational issues, and we had to cut down like we were trying to do, what was it, a $60,000 wholesale fee, and we had to cut it down just because when the buyer was doing the inspection, one of the biggest issues was that foundation, and foundation is a big expense of it, so we had to cut it out and then just split between me and my partner the $32,000 wholesale fee.
Oh wow, damn, that's awesome.
And so it just yeah, you're gonna come across some of deals like that, but again, it's just my markets are different than some other ones, so it all really depends on like on the deal that you're getting it, and then just honestly, I to me I'm more hardcore, like just like how the aggressive buyer
Hmm.
is a lot of the offers. I'm perfectly fine with getting those, but I like to play the commitment level and the follow-up game where if they don't accept the offer right now, I just stay consistent with them, touching up once a month or 3 times a month, and see like, hey, what's going on now? What's going on now? What's going on now? Are you interested now? Because are you still interested in selling, or what's going on? So I don't follow up just once or twice or 3 times. I follow up about a good 12 times to until they end up telling me like, look, I'm not even going to be interested in selling my property anymore, or yeah, just I'm not interested in your offer. Please like stop calling me whatsoever. But even so, after that, I set up like a 6 month period for a follow up as well too, just because you never know when things can change, where people might need that finance need, and that's where I'm trying to come in and just try to be that assistance to them. Yeah, so that way I'm basically putting myself on top of their list, on top of their mind every single day or every single month, and show how serious I am. Just because persistence and consistency is always going to be showing, and people appreciate that more often than anything else of how consistent you are.
Got it. Interesting. All right. Well, I think that's about it. I appreciate the calculator though. That's gonna come in handy for sure.
Yeah,
Um,
so use it. Don't abuse it. Don't spend too much time. I know you get sometimes you get caught up in numbers. Well, what about this? What about that? So just try to keep it very, very simple as much as possible from there. Um, and just any other questions, you can message me on the website. There's a little chat button at the bottom right corner. Or what's it called? Just continue attending these events. And if you happen to come across a deal in the future, or you want me to analyze like a deal, that's also available too. Or if you want to do more like a one-on-one, I'm not sure how much real estate experience you already have going on. But I do more one-on-ones as well too, where we actually go in depth about role playing, handling objections, doing the analysis, doing the calling, marketing strategies for the areas that you're at as well too. So there's a lot of different things that we can structure more one-on-one. But that's also available on the website. It's an hourly basis, so within an hour you can definitely do like a good amount. It all depends on what it is that you need help with a lot from there. But just having that extra hands is going to be available right there from on the website as well too. Since you're going to be spending majority of the time analyzing deals on the website. Any helps or questions you have, you can reach out to me there.
All right. Well, one last thing. If you had any advice for, somebody starting out, what would that be?
Uh, just don't take no for an answer. Don't just take one no and just give up. And then be ready because as soon as the number one thing, the worst thing that can really happen is somebody saying yes right away. And when somebody says yes to you, yeah, you could get stuck on what's my next step? What should I didn't expect that answer whatsoever. So be ready for that yes moment and just be confident and don't be afraid of making like the mistakes. I made my mistakes, but that's the way I learned. And then from there, just continue networking. So that way you can expand, especially if you're going to be wholesaling locally or if you're going to wholesale virtually. Just try to network as much as possible because again, you never know who can help you out, and that extra help can be like the difference that can help you take those extra steps or figure out something that you're stuck on that can give answer like all your questions. So one is just be consistent. Two, just be ready at all times. That's why I set up everything on the website for you to have access to that, or any issues or comments, questions, you can reach out to me as well. And then two, just be consistent.
All right. Awesome. Well, thank you so much, man. I'll probably see you
Of course.
around. If anything, if I have a question or anything, I'll probably book that call. So
Yeah,
we'll be in contact.
I will be in touch. You have a blessed night and happy Monday.
You too. See ya.
See ya.